the unusual mover. And the reason why we call it unusual is because it's the first time the MRF stock or any stock in the Indian market has gone ahead and traded in 6 digits or above 1 lakh rupees per share. It took over 2 years to traverse this journey. Sonia tells us about this unusually big move, Sonia.
And it took a long time, right, for this mark to be hit 1 lakh. And it's the first Indian company to cross that 1 lakh mark, as we told you. Now, I just mapped the trajectory of the stock. Of course, we spoke about the last 2 years. But if you look at how the stock has done since the low of the pandemic, right, from March of 2020, the stock is up 92% from that time. So it's almost doubled since there. And the financial track record of the company has also been pretty strong. So we've mapped the last 5 years trajectory in terms of the top line growth. And, the top line has grown from 15,000 crores way back in FY19. It ended FY23 with 22,578 crores. Outsized gains, as you can see, came in the last 2 years itself, FY22 and FY23. Because there were lots of issues that the auto sector was facing in the preceding years, given the pandemic, the supply side constraints, etc., the issues in Europe too. So the last 2 years have been extremely strong. The reasons for strong growth: improving demand, supply side issues have eased for the auto sector. There were price hikes that the company had undertaken in order to pass on both crude and rubber prices to the consumer. And now we've seen softening of raw material prices, because of which the margin situation has also improved. In fact, just case in point, right, in Q4 of this year, the margins went up almost 500 basis points on a year-on-year basis, coming in at 14.7%. Now, brokerages have forecasted a very strong growth in FY24 and FY25 as well. Just to give you one report, Motilal Oswal put out a report where they forecasted the revenues to grow from 22,000 crores to 25,000 crores in FY24 and 27,300 crores in FY25. They expect an EPS growth of 17.5% in FY25 from FY24. So strong growth is expected despite the kind of up move that we have already seen.
It's really a year for the autos and auto ancillaries. I mean,